Hey guys, welcome back to another episode. In this video we will share with you how to trade the trendline shift for high probability trades. So, this is a very simple, yet profitable strategy for every trader. As usual, we'll have plenty of practical examples. The idea is to fully understand this wonderful trading strategy and to make the most out of it. If you want more videos more often, please smash the like button, subscribe, and turn on the notifications bell so that you know exactly when new content is released. And don't forget to share this video across your WhatsApp, Facebook accounts, or Twitter to show your support. A very important point before we start. Everything we discuss in this video can be used for currency trading, stock trading, and crypto, because price action stays relatively consistent across different assets, so we're going to go very in-depth in this video. How to trade the trendline shift for high probability trades. I am a pure reversal trader, looking for those tipping points, where the markets go from bullish to bearish trending phases and vice versa. Trading reversals is usually straightforward, but there are two main difficulties when it comes to reversal trading. First, not all tops and bottoms completely reverse into the other direction. Often price just consolidates sideways, and you are in a trade that hovers around your entry. Second, often you have to wait for days or weeks for a reversal, but then price just takes off without giving an entry signal. Here, it's easy to start chasing trades or look for other mediocre trades. So, in this video, I'll show you how to counter some of those effects. Trendlines are well respected, and adding the concept of the trendline break can help filter out low probability market reversals and also time re-entry trades. The trendline shift is one of the 5 setups that you will also learn in this channel. Drawing and trading trendlines. Getting used to drawing trendlines takes a bit of time, but once you have drawn a few, your eye will get used to seeing trendlines quickly. In this strategy, when you draw your trendlines, always look for at least 2 contact points. Don't worry about violations about the trendline. The trendlines don't have to be 100% accurate, and as long as price respects them reasonably well, you are doing it right. When it comes to trading the trendlines, there are 2 principles that you can help you make better trading decisions. First, entering on the break is a higher risk trade. Waiting for the retest is the safer option. Second, don't blindly trade off the trendlines with pending orders. Wait for a clear reaction around the trendline. This screenshot shows a chart with 3 such scenarios. First, a downtrend where we connected the highs. Price then broke the trendline, retested it afterwards and took off. Second, an uptrend where we drew the trendline connecting the highs initially. Price then started trending stronger, and the trendline also acted as support at the lows. After price broke the moving average and the trendline, it retested it quickly, before selling off strong. Third, the recent uptrend with a trendline is support. Price is about to break it, but according to the trendline, there weren't enough sellers to push price below the trendline. Here we are even seeing 2 trendlines intersect, which makes it even harder for price to break, but if you look at live price now, price nicely broke the trendline. In this video, I've included a template with the system that you can simply upload to your chart, and it will automatically plot all these indicators perfectly on your charts, so there's nothing for you to worry about. Get the download link on the description. Re-entry and confirmation signals. This example showed how we can draw trendlines and use the break of the trendlines to time entries. Sometimes, we can use the trendlines to find later re-entry points after a reversal and counter the effect of missing trades. And now, in this screenshot, we see 2 reversals. First reversal. The initial entry could have been at point 1, when price broke the trend line and the moving average. A safer entry could have been taken at point 2, after the retest. Note how those retests of the trend lines often coincide with a retest of the moving average as well, which is a great confluence signal. Then, price sold off fast, and at point 3, price broke and retested a lower trendline. Usually, such lower trendlines are a good spot to take profits because they often hold when momentum slows. And when you get a confirmed break of the lower trendline, you can then consider a re-entry on the retest of the trendline. Second reversal. This is a classic example. There wasn't an initial trendline at the real top, but according to conventional reversal trading, The first entry could have been made at point 1, when we broke the moving average. The lower trend line then provided re-entry opportunities. Notice how price broke below the trend line and then moved back into it, trying to break it multiple times, but was always rejected. The final sell-off then happened when the trend line coincided with the moving average. Momentum acceleration at the Bollinger Bands extreme. We talked about the power of Bollinger Bands spikes at the band squeezes before. When combining those spikes with trendline retests, you can create another powerful combination of confluence. This screenshot shows a bearish reversal with two trendlines. During the sell-off, price broke both trendlines and then retested them. Point 1 and 2. While penetrating the Bollinger Bands. Here we see why it's important not to trade off those trendlines blindly and always wait for confirmation. The spikes through those trendlines can be very strong. Bollinger Bands squeezes are a well-documented trading concept, and when combining it with the concept of trend lines and reversal trading, the trader can create powerful confluence concepts. Trade examples. The current situation on British Pounds CAD is another great example how trend lines can help you understand reversal and trend structure clearer. The market top and the fading bullish momentum was very obvious, but it wasn't until the trend lines broke that price confirmed the reversal. And now on the move lower, the trend lines act as support again. A trader who is aware of the trend line can understand price in a more effective way, is not surprised why price does not follow his plan, can plan his trades in a new way, and also manage re-entries. It's usually always possible to draw multiple trend lines, and especially newer traders often tend to use too many trend lines. We suggest only using 1 or 2 trend lines per market move and to focus on the most important ones. The goal of trend lines is to add context to your chart analysis and not to confuse you. Here are other examples of how to trade the trendline shift for high probability trades to fully understand this wonderful strategy and to make the most out of it. The trend lines don't have to be 100% accurate, and as long as price respects them reasonably well, you are doing it right. As always, if you learned something new, or if you want more videos more often, make sure you subscribe, click the notification bell, and share this video across your WhatsApp, Facebook accounts, or Twitter to show your support. See you next time.